For the first time in a decade, Germany is facing a significant challenge as the number of unemployed individuals has surged past 3 million. According to data released by the Labor Office on August 29, the unemployment figure reached 3.02 million in August, marking an increase of 46,000 from the previous month. This alarming statistic raises critical questions about the effectiveness of the government's ambitious investment strategies aimed at revitalizing the economy. Andrea Nahles, the head of the Labor Office, commented on the situation, stating, "The labor market is still shaped by the economic slump of recent years." This statement underscores the ongoing struggles Germany faces with a sluggish economy, compounded by external pressures such as the import tariffs imposed by former U.S. President Donald Trump. These tariffs could potentially lead to a third consecutive year of stagnation, a scenario that would be unprecedented for the nation. Interestingly, while the seasonally adjusted unemployment rate held steady at 6.3%, aligning with analysts' predictions from a Reuters poll, there are signs that labor demand is waning. In August, there were 631,000 job vacancies, which is a decrease of 68,000 compared to the same month last year. This decline in job openings raises concerns about the future of employment in Germany. Labor Minister Bärbel Baas pointed out that ongoing global economic uncertainties, along with the ramifications of Russia's aggressive actions in Ukraine, continue to exert pressure on the economy. She emphasized that these cyclical challenges are impacting the labor market and necessitate proactive measures from the government. In response to these economic hurdles, the government is planning a substantial investment initiative, which includes a remarkable €500 billion, approximately 749 billion Singaporean dollars, special fund dedicated to infrastructure projects. This move comes after the government decided to relax fiscal regulations. However, many economists and business organizations caution that it may take years for these investments to yield tangible results. They argue that additional strategies are essential to tackle the deep-seated structural issues plaguing Europe's largest economy. Dr. Rainer Dulger, president of the Confederation of German Employers Associations, BDA, expressed a critical viewpoint, stating, 3 million unemployed is a damning indictment of the refusal to reform in recent years. Germany needs a genuine autumn of reforms. This statement invites a broader discussion about the necessity for reform in the face of rising unemployment. As households grow increasingly cautious about their financial futures, many are opting to save more, a trend that is likely to intensify with the negative news surrounding the labor market. Clemens Fust, president of the IFO Institute, noted that even a modest rise in unemployment can lead to heightened anxiety among consumers. In a separate report released on the same day, it was revealed that German retail sales experienced a more significant decline than anticipated in July, falling by 1.5% from June. Analysts had only expected a decrease of 0.4%. This downturn clouds the outlook for consumer spending in the upcoming third quarter, as many had hoped that domestic consumers would compensate for the cooling foreign demand caused by U.S. tariffs. However, these expectations were dashed in July, according to Dr. Cyrus de la Rubia, chief economist at Hamburg Commercial Bank. Additionally, the Statistics Office reported a 1.4% year-on-year drop in German import prices for July, slightly more than the 1.2% decrease that analysts had predicted. Given that Germany relies heavily on imported primary products and raw materials, fluctuations in import prices can have delayed effects on inflation rates. Preliminary data from August indicates that inflation rose in 4 of Germany's largest states, suggesting that national inflation may also increase, aligning with analysts' forecasts of a rise to 2% from 1.8% in July. This situation prompts us to consider, what reforms are truly necessary to address these economic challenges? Are we prepared to engage in the difficult conversations about the future of Germany's economy? Share your thoughts in the comments below.